Hello everyone, this is Sean Spalding. I am creating this quick lecture video to go over part of the reading assignment and to hopefully provide some more context into the information that you'll find here on the Franchise Tax Board's website. So first off, the Franchise Tax Board handles the state income tax for California and also the minimum franchise tax board fees which arise for corporations and LLCs, limited partnerships, where they're collecting a fee essentially for being able to conduct business as a corporation or whatever entity that is applicable. So this particular web page starts off kind of in an interesting order, I think, because it's easier to find on Google, because most people are going to say, hey, how can I revive my business, not what is the cause of it. So perhaps because it's, again, easier to find, they decided to create it this way. So we'll scroll down here to the bottom and we'll look at the various pieces of information here. The first one to look at is the suspension causes, right? So why might you have been suspended, or how did you get suspended? For Franchise Tax Board purposes, what they will do if you do not file a return that is required, which is your income tax return, Form 100 if you're a corporation, Form 100S if you're an S corporation, etc. Again, whether you're an LLC or a corporation, you have to file some return and you have to pay the taxes. And if you don't, then the FTB can actually send a suspension to the Secretary of State. The Secretary of State will process it, and it will show up on their business search website for all to see that you're suspended. The other avenue, or the other common occurrence, I should say, for a business to be, or a corporation or LLC to be suspended is through the Secretary of State by not filing the required statement of information. These are typically filed annually. It only costs $25 and they can be done online. We'll see where that's done later in the course, just so you're aware of where it's located. Very simple form to fill out. Usually it's you check a box that says nothing's changed and pay the $25 and that's it. But if you don't, there can be serious implications for the corporation or the business entity, as we will see. So we'll go down here, we'll close out the suspension causes and look at the suspension effects. So this is kind of a quick look at what the ramifications of being suspended by the Franchise Tax Board or the Secretary of State are. Here you can see you can't legally transact business, so it's going to be hard to make any money if you can't transact business. Bringing an action or defending itself in court. I think this, I've had this happen to clients before where they are suspended, their corporation is suspended, they have a lawsuit against them for a service or breach of contract where damages, say a AC unit or something like that broke. Now you've got a claimant or plaintiff coming in and saying, hey, this person did this wrong, it wasn't my fault. They sue them. Well, actually, the corporation, while they're suspended, can't even defend themselves. They can't say, no, it was the manufacturer's fault. No, it was the plaintiff's fault. He actually, stuck a screwdriver in it. You can't even show up to defend yourself. So you'll pretty much just lose to a default judgment. So obviously, that's a big issue. You can't get an automatic extension of time to file. This is important for filing your tax return. Most it seems anyway, corporations or business entities rely on the automatic extension for the time to file because they can't quite get it done, whether it's their accountant or whatever the case may be. So when you aren't able to file that, the late filing penalties are actually pretty harsh for individuals. It's 25% at 5 months. So whatever your tax liability is, or whatever the balance due is, you're already getting hit with a 25% penalty after just a few months. Filing claims for refund. So if the corporation is owed money, if they've overpaid their taxes, they can't actually get that refund until their suspension is lifted. It doesn't happen very often, but I actually just came across a client where the Franchise Tax Board had created proposed assessments for years that returns hadn't been filed. The taxpayer was very sick, dealing with cancer for several years, and the ball kind of got dropped by some of the office people. And now there's actually, now the returns have been filed, there are refunds due. But while the corporation is suspended, which it still is because we're going through the reviver process, they're not able to get that refund. So again, that is a problem. Having any appeal rights, that can be a problem too. This occurs if there was an audit and you wanted to appeal as the corporation or the business entity the determination of the audit. Not being able to do so could certainly be problematic, especially if they're just estimating income and expenses, which they're certainly able to do under certain circumstances. And then I think we'll talk about the last two here: legally close or dissolve the business. Now, this is an interesting effect of being suspended, is that when you're suspended, you can't close the business. You can't dissolve the business, which seems a little bit counterintuitive because you can't legally transact business either. But the idea is that once your business has become suspended. So what happens a lot of times, I'm trying to think of a scenario. What happens a lot of times is you have people that are like, oh, I want to start a corporation, and I've got all these good intentions, and I'm gonna get right on it. So they file the articles of incorporation, which we've seen is fairly straightforward. Pay your $100, you fill out the pertinent information, and voila, you have a corporation. And then what happens is that person, they create their corporation, and then they're like, actually, I'm just gonna, stay at my current job, and I'm not gonna actually put any work into the corporation. And then they just figure that they can forget about it, and then they start getting notices to their, and they usually use their home address or however it gets to them. They'll be notified that they're going to be suspended, that they owe this money, and then they'll start getting calls, if their name's on the statement of information, from the Franchise Tax Board saying, hey, you need to pay this money. Typically, though, they're not required to because it was a separate entity. That's for a different course. But that harassment, if you will, can continue indefinitely because you can't actually dissolve the corporation. And what I've seen the Franchise Tax Board actually doing, or the employees, is requesting offers in compromise in an attempt to collect some amount of money, knowing that in reality this corporation never actually did any, transacted any business or anything like that. So there were no assets in or out of it to be collected, which I think is somewhat of a ethically nebulous practice, but hardly surprising, I suppose, at the same time. And perhaps they do have a right to try and collect this money, even though they know that they can't force an individual, a personal, that may have formed the corporation to pay the tax unless some other factors are met. Anyway, that's an issue. And then maintain the right to use their name. So while you're suspended, if somebody else files articles of incorporation with your name, they could potentially take your name. And then when you try to revive it, it may no longer be available. And so some people probably have an issue with that, particularly if there's a serious attachment to the name. But if not, I suppose it's not the end of the world. But again, certain people are going to be affected by that. And again, I think it's an interesting effect of the suspension. Okay, so that is the major suspension effects. Contract voidability. I mentioned this earlier. They also have created this, and if you're a cynic, I suppose you might think, well, why is it that you can just pay to relieve yourself from this contract voidability? Basically, what you do is you pay $800. Essentially, I mean, it's a little bit the analysis doesn't end there. But just as a general matter, you'll have to pay a whole year's minimum franchise tax board fee, whether it's $800 or it's the greater of the 1.5% if you're an S corp of the net earnings, to get this contract voidability relief. Again, it's interesting, but it could be helpful to some businesses that have pending litigation or are worried about a contract being voided. But kind of an interesting little wrinkle in the suspension of a business entity area. So that is pretty much it as far as what I wanted to walk through with you on suspended corporations and kind of what we see in practice with suspended corporations. As far as the reviver process goes, we're not going to get into a great deal. You can see here it is pretty simple to do. You fill out the form, you send it in after all the returns and all the taxes are paid, and then you can get the reviver, and then also you can look into whether or not the relief from contract voidability is something that is needed. Certainly something that's available. So that's pretty much it. If you have any questions, feel free to contact me through Canvas, and have a good night. Thank you.